Aloha everyone. First thing is first, we have no new long signals tonight on an end of day basis, no new short signals tonight on an end of day basis, and no sells, covers, partial covers on an end of day basis. So with that being said, we're going to mainly just focus on the indexes this evening. One key thing, this reversal that I saw today is unlike any reversal I believe I've seen in 7 years. I think 2008. I've seen this before, but this was a huge reversal on absolutely huge volume. I don't see how that supports that yesterday's lows are going to hold. However, I don't even try to predict the future. I live in the now. I am agnostic to the bull or bear side, like always, and I just obey price. Right now, price is absolutely terrible. Now, I know some people watching this video might be very new to these videos and think that my price window is very small, but guys, I've used this since 1998 actually. I've been looking at these chart patterns the exact same way from 98 to now. It allows me to see tight consolidation, volume, contraction patterns, whereas you don't see it in other places. Like I think somebody's like, well, Facebook's forming a base now. Really? If this is considered a left side of a new base in Facebook, then you really need to go back and look at the other bases. But I can tell how these bases weren't necessarily as good as the last ones, and Facebook really didn't look good until June. But the base now just doesn't look good. But this is what I've been using to find tight contraction patterns and price patterns. So if the price pattern is too small for you, just go ahead and feel free to look it up on your own charts. The bottom window is balance of power. Once again, it helps me find better looking stocks like EFOI's base. To me, on a visual basis, looks better. This is no way near any kind of consolidation pattern I would buy on an end-of-day basis, but it's one of the best looking technical patterns out there right now. And compare that to something like Google, okay, there's two different things. So that's what I use BOT for, but it's pretty irrelevant for our analysis on the indexes. But let's go ahead and get to that. So the NASDAQ, we see, it's looking pretty ugly, but are we starting to get oversold? On my daily long-term stochastics and other time frames, it does look like that. You can see MACD here. We're getting near the recent lows, and same with TSV. Going back to those October lows. Stochastics, the same thing. A slight turn up in stochastics, but that's still too early to be confident that any bounce is going to happen, and RSI is racing to the lows on the NASDAQ. Now, however, I want to go and show you now a weekly chart, and I want to go all the way out to 2008. You can see MACD nowhere near oversold. If we even use the 2008 lows or even the 2011 lows, nowhere near those oversold levels on the NASDAQ. So to say that we're extremely oversold and have to rally for more than a few days, sure, but in longer term, this is not a good, healthy break, and we have a lot further to go before we test those lows. Same with TSV here. You can see that TSV is not even below the middle line area, so it has a lot further to fall on a weekly basis, much less a monthly basis. Now look at TSV on a monthly basis, very far away from those 08, 2000 lows, and the 2008 lows, 2000 lows. Look at how far away MACD is, and then we can move over to stochastics and see the same similar situation on a weekly chart here. Looking at the 2008 lows, stochastics nowhere near those lows, RSI neither. And when we look at a monthly chart pattern, once again, RSI and MACD are only coming off overbought territory. So don't think for even a moment that we for sure have to have bottomed here. Where's your proof? There's no proof. And then if we move out to the Russell 2000 working backwards, you can see on stochastics and RSI, nowhere near oversold on a monthly. On a weekly, using the 2008 lows alone, we're getting there. We're moving towards the right direction, but we're not there yet. Switching over to MACD and TSV on a weekly, you can see going out to the 2008 lows. MACD, TSV, nowhere near there. And on a monthly, hard to see here because of the volume. Let me see if I can get rid of that really quick. Delete. You can see that TSV nowhere near those lows, and much less MACD, which isn't even remotely close. So once again, we have really technically a long way to go before we can say we're oversold on a monthly, weekly pattern. Daily pattern, sure, we're getting there, but even then we're not there, and there's no hookup in these lines to indicate that we are for sure going to turn off these recent lows. S&P 500, same similar situation. TSV, MACD, looking back out to the October lows. You can see we're getting there. We're moving there. We're actually there with TSV, MACD. We're almost there. But on a weekly chart, looking back to a more severe sell-off, we're nowhere near oversold levels on TSV or MACD, much less 2011 lows. So we still have technically a long way to go before that even comes in play. And then on a monthly chart, same similar situation. TSV looks weaker, but look at MACD, long way to go. And then if we do the same thing again, looking at stochastics, RSI is getting there on the S&P 500. Stochastics not quite there yet, but then it gets worse as you go out to a weekly using the 2008 lows. We're not there yet on RSI. We're not there yet on stochastics. So it's kind of hard for me to be, bullish on a possible low here. Same thing with the monthly chart. Look at the stochastics. Nowhere near those 2000 and 2002 and 2008 oversold levels. And then if we just go ahead and just move over the Dow Jones Industrial Average while we're on this monthly, stochastics RSI nowhere near there. Moving over to a weekly for the 2008 lows, getting there, but not there yet. And on a daily, though, once again, we're getting there, but not there yet. Same thing with TSV, MACD. Looking at the 2000 and October lows, TSV, we're there. MACD, we're there. But once again, on a weekly basis, we're getting there, but not quite there yet to the 2011 lows. And then when we use the 2008 lows, we're nowhere near there yet. And on a monthly, once again, with the Dow Jones Industrial Average, nowhere near oversold levels. So like I keep saying, it's very hard for me to believe that yesterday's low is the final low, especially given today's reversal. Absolute carnage, ugly sell-off. Even if we bounce back and forth here, it should take a while before we find a real meaningful low. The last time I can find a price break like this that's so severe coming from the highs, like back in 2011, that's going to be kind of harder to get to. While we were coming off the highs, the break wasn't as severe. If you look at the volume in the break whenever it started, you can see that it's not quite like what we have now. Look at the NASDAQ volume. It's not quite as scary. It got scary looking eventually, but that's just another thing. It got scary looking eventually. It was already off of its highs when this started to happen. It's not like that started to happen immediately off its highs. This time around, it started to happen immediately off its highs. And the only time that I know when that happened last was in 1987, which was obviously the last huge crash, one-day crash. And as you can see here, using the October lows, we had to test those lows in December before we slowly started to grind higher and before new leading stocks started to emerge out of sound consolidation patterns. But it took all the way till December, which means if you're thinking that the market bottoms now, well, you unfortunately have about another 2 months before that's probably going to be true, because there's just been a lot of damage in a short amount of time. So while we could easily have seen the bottom, it's going to take a while of backing and filling and some volatile action before we can actually break out to the upside and before we're going to get a lot of new positions. Now, I want to remind everybody that's not familiar with my website, before this sell-off happened, I was tracking more stocks than I have ever tracked in my life. I was following about 100 different positions. I wasn't long 100 positions, but on an end-of-day basis, from my long signals that I posted to subscribers, we had at one point 100 stocks trending higher. Now we have 20. There are 20 names that remain holds on the end-of-day basis. In my personal portfolios, I am only long 6 different stocks and 3 inverse ETFs. We missed our limits on TVIX and DXD. Not a big deal, but BIS, TEX, and SRTY continue to work. But the unfortunate part about that is that, once again, this volume just happened too soon off the top. So while we're not as short as we would like to be here, because this is our first crack, and in 2001, after our first crack, it didn't gap down low enough to miss entries. This one did, and Monday's gap down to exacerbated the problem. But overall, very few stocks remain that we're watching, and not only that, there are 0 setting up. There are 0 beautiful patterns out there that make me salivate and say, I got to get long this signal when it triggers. Right now, it's a sitting on your hands time, and in cash, if you're a new trader and if you're a trader that knows how to trade intraday, we continue to give intraday signals on the index ETFs and their respective derivatives. We like to use the 2 times and 3 times index ETFs. Normally, we like day trading stocks that are in play, like 6D today. When I saw this thing at $1.40 today and it was breaking out, it was definitely in play, but this goes to show you the power of intraday trade still. There's no way I would have thought it would have gone to 440, yet it did. So still there's some action out there, but it's all intraday. On an end of day basis, it's too volatile. Got to take it easy. Aloha, everyone.